Hello accounts people, time to have a look again at accruals and prepayments. So focusing only on expense accounts, learn income accounts as the opposite, although lots of marks are dropped in AAT exams from students not recognising and treating an account as an income account. So we've got a series of instructions to work through, and what we've got at the moment, it's brought down, hence it's the 1st of January. It could be just sitting there as the 31st of December and expense. Either way, he'll then get carried down, brought down, same side. And what we need to do is to reverse it back into this year's accounts. Just reverse it basically. One credit, one debit. So that's the reversal done on the first day of the financial year. Then we've got some bank payments, so a summary, because there's been lots of these made possibly throughout the year. Maybe just one a month, maybe one a quarter, but either way. And at the close of play at the 31st of December, that is what it would look like. That 1100 is what would go off into the trial balance. The rest are end of year adjustments. So we've done that one, credit the bank, debit the expense account. After the year ending, we've got an additional invoice received and paid. That would initially show credit the bank because it's at the end of the year. Significance of that will show a little bit later. Credit the bank, debit next year's. But now what we really need to do is to adjust this year's, because what we do know is we really should add it in as an accrued expense. We'd earned the bill and the correct figure is the 1300, and that transfers a profit or loss. That is what will go off to our profit or loss account. It will go into our profit and loss account as an expense, or our trial balance as an expense, debit side. And that's the 1300 going into our profit or loss account. So that's closed off, finished with. It doesn't brought down or anything like that. But we've got to deal with the fact that we've actually put this £200 in. It's an accrual. And that will sit as a current liability in our statement of financial position. And then that would be, naturally, not everybody bothers to show this because it's simply going to be carried down. Now of course this is 2018. And that is what then gets reversed into next year's expense account. So let's do that one then. One debit entry. Put the right date in. I said that 300 would show us something, because actually what we're saying is of the 300 that has already gone out the bank £200 is the previous year's, it's 2017, so the balance on there is 100. That's what, when that got paid, was the correct amount. So that one only had expenses. It had an opening prepayment and a closing accrual. Some accounts actually naturally have a mixture of the two, admin expenses, and this one's a telephone expense account. So if you're used to paying your telephone bill, BT normally ask you for line rental in advance, and you pay for the calls afterwards when they've been added up. You don't know how much they are at the start of the year. You might pay a direct debit, but it might be a little bit up, might be a little bit down. So this one we've got a mixture, and what we've actually got, I've left this one in actually, is our first reversal. So we've got a prepaid expense of 400, that presumably is a line rental. I've actually put the one entry in there. So we're putting the 400 back in at the start of the year. And I haven't done the same with the accrued expense. So we've got both. So we're putting the 2,400 into our telephone expense as well. This one's a natural one. Admin is the other natural one, where you've got so many different things in admin. You'll have a mixture of accruals and prepayments. That's showing both. Then we've got a cash book. Again, a summary account, 1950, a nice big bill. So that's what would sit at in the trial balance column of the extended trial balance. It would be the difference. It would actually be 17,500. The 19,500 plus the 400 minus the 2,400. So our actual extended trial balance at the moment would just show the 17,500 there. We'll finish it off though. Because now we do our end of year adjustments, so included line rental for January, so it's a closing prepayment, so some of this money was next year's bill, so we better deal with that one. One credit entry, and that will be carried down, brought down, sit as a current asset in our statement of financial position. And we've got some estimated core charges for November and December, £3,000. Those have got to be incorporated, they're big money. We will have made the call, incurred the bill, so we better actually include it. And we need a double entry for this, so this is now our accrued expenses. So £3,000 sitting there. So that's a liability in our statement of financial position. We've entered them, we've done the double entry. Now we can work out our proper profit or loss amount, so we know what we should be ending up with. So 20,300, one credit entry. That's the figure that will show in a statement of profit or loss. The prepayment and the expenses in our statement of financial position. So let's finish off the extended trial balance. That 17,500 includes the opening items, which is why all we're interested in now is the adjustments for the end of the year. So that 3,000 is accrued expense, the liability, and that was its double entry. And then the prepayment, 1 debit, 1 credit. So those figures balance off. And in our statement of financial position, there's our liability and our asset. If we put just in the accounts the difference, that's okay. It's not going to make any difference to the balancing of the accounts. But at the start of next year, when you're trying to reverse it, it might get a bit confusing. And our figure for a statement of profit or loss, we know what it should be. But just to prove it, there's our statement of profit or loss figure. So all we can do now is, just as one last little exercise, we might as well reverse these back out. So if we do this one then, so 01, so we're now in 1st of January 8, that's the 200 going into next year's. And then the accrued expense, I haven't bothered to carry and bring these down this time. It's already coming up, but it's 3,000 this time. So that's now showing our opening entries into next year's, the part that of whatever we pay out the bank, 3,000 belongs to this year, and we've already paid £200 in advance.